Hi everyone and welcome to today's video, 10 credit building tips to improve your credit score instantly. In this video, I'm going to share with you 10 top tips to help you build credit and improve your credit score instantly. Before we get into the video, remember to give the video a like and also be sure to subscribe for more videos like this. Let's get into the video. You will have found this video because you're looking to build credit and improve your credit score. So I recommend just checking on your credit score, especially if you haven't checked it recently, because it can change monthly or sometimes even weekly. So I'll leave some links in the description below for some websites where you can check your credit score for free. It's really easy to do. I recommend checking your credit score on Credit Club because Credit Club uses your Experian credit score and Experian is used by the majority of lenders. So I recommend going on there for free, just checking out your credit score, and then you know where you are, and then you can follow the top tips in the rest of this video to improve your score. There are many factors that can affect your credit score, such as how you've previously managed credit, how you currently manage credit, and also how easily identifiable you are. So those are a few of the factors that can affect your credit score, but that just means that there are numerous ways that you can improve it. So let's get into the top tips. And if you're able to do any of these, then your credit score is definitely going to get a boost. Tip number 1 is to register to vote. So this is because you're highly unlikely to get credit unless you're on the electoral register. So that's tip number 1, it's most important. You probably might be on the electoral register already, you might have already registered, and that's great. Just remember to make sure you stay registered. If you were to move house, for example, make sure you register at your new address straight away so that you can keep yourself on the electoral register, and that's a great tip for getting credit and also building credit. Tip number 2 is to always make payments on time. So just make sure you set up a direct debit to make your credit card payments every month without fail so that you don't miss a payment. If you miss a payment, this can really damage your credit history, and also you just want to make sure you're making your payments on time so that you don't have to pay any hefty interest, or so you don't damage your credit score. So it's a win-win really, so just make sure you always make your payments on time. Tip number 3 is to check your credit report. So when you check your credit score earlier, when you went onto Credit Club or one of the other websites, you can see your full credit report on there. So when you check your credit report, you just want to check for any CCJs or bankruptcies that have been misrecorded against your name. So things that shouldn't be on there basically that are. So you just want to check if there is anything on there that you're not expecting, and then you can actually challenge those and get them removed from your report. So you will want to check your report actually with all of the credit reference agencies. So if you just check that one time, you can check if there's anything on there that shouldn't be basically. And then you can periodically check your credit score with one of the websites that I mentioned earlier. If you do have any CCJs or a bankruptcy in your credit history, just remember that they can remain on your credit file for up to 6 years, but you can definitely work on all of the other things that I mentioned today, and if you're able to follow all the tips that I mentioned today, you can definitely still boost your score. Tip number 4 is to keep your utilisation low. So your utilisation is the percentage of your overall credit limit that you are using. You should aim to keep your utilisation to 30% or less. You could even aim for 10% if you want to, but 30% is a good place to aim for. And also just make sure you don't go near your credit limit. So that's actually the most important thing here, is to not go near your credit limit really, and aim to keep your utilisation, like I said, to 30% or less, and that will be great and that will really help you improve your score. The idea behind this is that you're showing you have access to that credit, but you don't need to use it on a month-to-month basis. So that's why you're keeping your utilisation low. It's to show that you have the access to the credit, but you don't need to keep using it every month. It can make you look like a riskier borrower if you are going near your credit limit every month. So that's the reason behind this really. And that means if you do keep your credit utilisation low, then your credit score is definitely going to get a boost. A useful tip that I recommend is that if you do have a large purchase you need to put on the credit card, or you want to put a large payment on the credit card to get your perks or get some points, then absolutely do that. And then what you can do is just pay it off. As soon as you see it on your statement, you can make the payment and pay it off. That way it won't affect your credit utilisation, but you can still get the perks or the points that you need from making that payment. So that's a really useful tip that you can do. Tip number 5 is to keep your debt to income ratio low. So this just means that you try not to take on too many debts or have too much credit in relation to your income. Lenders will look at your income anyway when you apply for credit, so it's not too important, but it's just something to note that you can look out for. And if your debt to income ratio is low, then the chances are that you'll have a higher credit score. Tip number 6 is don't apply for too much credit at once. So if you're making a credit card application, for example, that's going to go down as a hard search, and a hard search will affect your credit history for about 6 months or so. So when you check your credit score, it will show you if you've got any hard searches in the last 6 months. So the difference between a hard search and a soft search is that a hard search is a credit card or a mortgage or a loan application. So any kind of search like that will be a hard search, and a soft search will be something such as if you go onto Credit Club and check your credit score, that goes down as a soft search, and a soft search will not affect your credit score at all. So don't worry about that affecting your credit score. A soft search won't affect your credit score, but a hard search will. So if you make a credit card application, for example, that will be a hard search which will affect your score. So the idea here is not to make too many applications in one go, basically, because if you've got, 3, 4, 5 credit card applications, for example, in the last 6 months, it can make you look like you really need credit and you're kind of desperate to get some credit. So that's why lenders look at that and they think it's a little bit riskier to lend to you. This is particularly important if you have a big purchase coming up, such as you're taking out a mortgage. So if you are planning to take out a mortgage in the next 6 months or so, just make sure you don't make too many credit applications before that, because it can affect your credit score leading up to your mortgage application. If you are applying for credit and you have got rejected once or twice, then try not to apply again, because it's actually just reducing your score every time and it's affecting you every time you make the search. So what I would suggest is if you have gone onto Credit Club, you'll see they've got a really handy tab where you can check your credit card eligibility, and that's a soft search, so it will not affect your credit score, but it does tell you the percentage likelihood of you getting accepted for numerous different credit cards. So you can go on there and have a look around, see which one you're likely to get accepted for before you make the full application. So that's really useful. I'd recommend checking that out. And I just mentioned Credit Club because that's the one that I find most useful. I think it's got a lot of stuff on there outside of just your credit file and your credit score. You've got a lot of other things on there. You can see your credit card eligibility. There's also loan eligibility. And so it tells you a lot of other things on there, which I find quite useful. That's why I mentioned that one. And also it's got your Experian credit score on there as well. So it's a really good one to check out if you haven't already. Tip number 7 is to keep your accounts stable. So this is thinking about the average age of your financial relationships. So financial relationships, this is accounts, any credit cards, any utilities, any other contracts that you've got. So anything like this will be a financial relationship. And when you check your credit score, it will look at your average age of your financial relationships. And if this is less than 6 years, then it can work against you and it can lower your score. Now, this is quite a tricky one to kind of maintain, but if you have a current account that you've opened and you've had open for a long period of time, then this can be really beneficial. So for example, I've got a current account that I've had for over 10 years, and that really brings up my average age of my financial relationships because I've had this for over 10 years, whereas I've got a phone contract that I've just had for 2 years. So that kind of lowers the average. So it's just something that can affect your credit score. So if you do have an account that you've had open for a long period of time, you were thinking about closing, it might be worth just keeping it if you still need to use it, just because then actually you can improve your credit score because your average age of your financial relationships goes up, basically. Tip number 8 is residential status. So here I'm pointing out that renters and people living with family tend to be seen as riskier borrowers, and that can actually dent your credit score a little bit. Now this one on its own, it's not too significant. So you might find if you're not a homeowner, then it's not going to lower your score that much, but homeowners are seen as less risky. That being said, if the rest of your credit profile is solid, then you should be good, but it's just one I wanted to point out. Tip number 9 is don't withdraw cash on a credit card. So if you withdraw cash on a credit card, it can dent your score. So it's one that can be easily avoided, and that way you won't lower your score unnecessarily by withdrawing cash basically. So that's all you need to do for this one, is just don't withdraw cash. Tip number 10 is to always enter your details consistently and accurately. So when you're applying for new credit or when you're checking your credit score, just make sure that you enter your income details the same each time if they still are the same. Also, you can make sure you enter your occupation the same each time, even your name. It may seem really simple, but it can flag as a potential fraud risk if you do keep changing it. So it's just an easy one to avoid. And if you are entering your details consistently and accurately, then it means that your credit score will get a boost too. That's it, those were all of the top tips. I hope you found it useful. Remember to give the video a like if you haven't already, comment down below, and also don't forget to subscribe for more videos like this. Thank you for watching and see you next time.